Joining us right now to talk more about the economy and markets, Macro Mavens President Stephanie Pomboy back with us. Stephanie, great to see you. Thanks for joining us.
Thank you.
How important are these durable goods numbers, down 4.4%, much worse than expected?
I guess the key is the non-defense capital goods.
I can tell you what they are. Ex-aircraft, non-defense capital orders, ex-aircraft, unchanged. The consensus was for a gain of 0.2%.
Right. So all across the board, I guess, weaker than expected. I think this fits in broadly with the idea that the best is behind us. The peak in economic activity, capital expenditures, employment, and profits, I think, is all behind us now. And we should expect slowing activity going forward, which really isn't surprising given the fact that the tax cut lift is going to come to an end shortly. And you've got the Fed tightening. And next year, by February, global central banks will stop adding liquidity entirely. So you're losing a lot of the key propellers of growth right now.
Stephanie, the fiscal stimulus of tax cuts drove CEO optimism. They were excited about it. They had all these big plans, yet we're not seeing it in numbers. So is the offset or the headwind trade concerns or global uncertainty concerns or a combination of all of them?
Well, I guess, if you look at capital expenditures throughout the year, generally, they haven't been particularly strong. You would have thought, given the CFO optimism, that they would have spent a lot more. But what they spent the money on was share buybacks and dividends. It looks like the latest quarter was a record for share buybacks. So, that's not.
And now that these stocks are on sale, they're going to do more of that?
Well, timing is beautiful here. But I think that from the stock market standpoint, it's kind of critical as we move forward. If the growth in profits is behind us and they don't have all this money from, the benefit of the tax cut, those buybacks you'd expect to slow next year. And that is a key support for the stock market that'll be gone because the biggest sector purchaser of stocks was the corporate sector itself, not retail investors.
Yeah, but let's talk about the real support of stocks. Does this give the Fed the heft they need to not raise interest rates anymore because now the economy is really not that strong? We're not going to do it because the stock market tanked. We don't do that, wink, wink. But is this going to send the 10-year back below 3%? And that will support stocks as now the relative valuations lean towards stocks.
Right. Well, I guess we saw earlier this week, you had a huge collapse in interest rates in the Treasury market and a compression of the yield curve, reduced inflation expectations, et cetera. And that didn't save the stock market from tanking in the face of that. So that idea that there's a Fed put, that you don't have much threshold for stock market pain before they bring in the fire hoses seems to be being tested. And I think that's in part sort of perversely due to Trump's tweeting about it. It's sort of put the Fed in a box where they almost have to tighten just because he's.
Well, that was the only. I know he got a lot of heat because Nixon was the last person who did that, but I was also worried. The only thing I was worried about, he was right.
Well, Twitter wasn't around when Nixon was the president of the United States, and as you pointed out earlier, we don't know what the real impact was. We could debate this all day long, for weeks and weeks, about with a president putting pressure on a central bank chief. We don't know that was inflationary.
I asked Robert Kaplan about it. He's my guest this weekend on Wall Street, and he said, we're not listening to it. We're not getting impacted. We're independent, and we're not going to get impacted by what the president says. Yes, he's been calling out the Fed, but we're not going to change our policy as a result. That's what Robert Kaplan said, president of the Dallas Federal Reserve, who's going to be on this weekend on Wall Street.
Because that was my concern, that Trump's right that the rates were going too high, but was the Fed going to be like, oh, now we got to raise them more to prove that Trump doesn't?
I don't think so. I can't imagine they get kowtowed like that.
Well, I think Trump is totally right that the Fed has been too aggressive relative to the economy, or maybe put differently, that the Fed has been exerting a drag on the economy that people haven't been paying attention to because it was masked by the stimulus of the tax
Here's what I
cuts.
don't understand is everyone's like, well, they got to get ahead of the inflation. They're sitting on so much bonds that they just purchased during all the crazy expansion. Couldn't they, if inflation ever really took off, couldn't they just start selling that and cause massive deflation? They would do more than raising interest rates because they'd be floating them, they'd be destroying the money they created basically during the crisis.
They have to unwind it anyway.
They do.
But they're letting it slowly just
Yes.
unwind. They're not actively trying to because they're in a very powerful position to create deflation because of the $1 trillion portfolio, right?
Multi-trillion dollar.
Yeah.
I think deflation, or disinflation is what we're really talking about, is sort of a lame concern. I think we don't have to, I'm sorry, the idea that the Fed is worried about inflation getting out of control is ridiculous. I mean, I don't think there's any concern, any real risk about inflation in the economy. As hot as we've been in terms of economic activity,
Well, then do you think,
inflation's been incredibly
Do you think
restrained.
one of the reasons they're raising is just so psychologically they can tell people, oh, next recession, we can lower it again? I think they were getting worried that there was no room to do that psychologically. People would be scared and panic. What are we going to do? We're at 1% now, and
Right.
it's a recession.
Well, that was the idea, was they needed to put more bullets in the chamber for use down the road, which is sort of, to my mind, it's like, let's kill the patient in an effort to, save something for later. And so,
Cause a recession so we can get us out of a recession.
I mean, it seemed kind of crazy. If you don't have a justifiable reason in terms of fighting inflation, I mean, the inflation, this cycle, has not been in the economy. It's been in financial assets. So it's, the QT, the
Because of the unprecedented monetary stimulus.